Hey everybody, Matty here with Altcoin Buzz. Happy Friday. Hope you are having a great one. Okay, today on Winklevoss Capital, Tyler Winklevoss is making the case for a $500,000 Bitcoin. That's right, a $500,000 Bitcoin. He breaks down all the conditions that would be required to hit that benchmark, and we'll let you know what year and when he thinks it could be realistic based on the growth trends that we're seeing from the macro perspective. We'll take a look at that. We'll take a look at new details now surrounding Vechain's project, VerifyCar. That's happening with BMW. New details and updates have been unveiled. Ankr has partnered with KardiaChain to offer a unique application in the decentralized finance space from a couple of different perspectives. We'll tackle that story. And Quarkchain as well. They have a multi-native token which is changing the DeFi ecosystem. Guys, if you like this kind of content, Bitcoin, blockchain, and cryptocurrency, then be sure to like and subscribe. Let's kick things off with a look at the markets today on CoinGecko.com. We're up a little bit, 0.8% in fact, all the way up to $373.6 billion. So projects generally up a percentage point or two for the most part. Bitcoin up 1.3% in these last 24 hours, gaining back a little bit of ground. We did slip in this last week or so. Right now, $11,464 with a dominance, however, that is still low, below 57%. I used to say below 60% and then below 59. Now we're below 57%. Bitcoin's dominance is 56.7%. So here on WinklevossCapital.com, Tyler Winklevoss is making the case for a $500,000 Bitcoin and all the conditions that would be required for us to one day potentially meet that price. He elaborates, for the last 75 years, the US dollar has been a reliable source of value. This is as a result of its comparatively good management by the Federal Reserve and the strength, resilience, and reputation of the US economy. Just my opinion, but I think some of those factors are changing, and they're changing more rapidly than they ever have before. Tyler continues, in fact, it is the most widely held fiat currency in the world and recognized as the global reserve currency, denominating and setting the majority of international trade. But with that said, we believe there are fundamental problems with gold, oil, and the US dollar as stores of value going forward. And below we make the case that Bitcoin is ultimately the only long-term projection against inflation. Okay, now the problems with the US dollar are multifold. We can't necessarily get into all of them here, but you guessed it, the main one that we're all facing and we're seeing now pretty much on a daily basis is inflation. This has had extreme variations. We've seen extreme cases of inflation in the Weimar Republic, in Zimbabwe, and other smaller countries. So we're not talking about hyperinflation per se, but just everyday inflation. You know, if the dollar inflates 2, 3, 4%, and that eats away at your savings, you're actually penalized for saving money. You're penalized for being responsible. So fiscal policy is a matter of some contention, and different people are going to have different perspectives. But from a Keynesian perspective, you know, you really are punished for just saving money and being a good citizen in terms of being judicious, diligent, responsible with your funds, because the inflation will always outpace any interest rate given to you traditionally by a bank. And now we're seeing this problem snowball a little bit, and this quantitative easing really is on steroids right now. We're seeing more and more money being printed out of thin air. And in a sense, I would argue the worst part of it is that this is all based on really the model that the US dollar has to offer. The fractional reserve banking system upon which the dollar operates is really based all around this. So Tyler continues here. What began as a shot in the arm during the credit crisis of 2008 never stopped, despite the US economy being out of the woods for years. And so what started as an acute prescription, talking about quantitative easing here, has morphed into chronic dependence and denial, or also known as addiction. The resulting maladaptive behavior is, not surprisingly, very difficult to correct. Every time the Fed tried to rein in QE pre-COVID, markets recoiled viscerally and became combative. That's exactly the withdrawal symptom that you'd see in an addict. It really mimics it very closely. And if stock market gains are your measure of success, you will choose not to upset the apple cart, even if it's widely untethered to reality. You will naturally avoid a painful intervention and rehabilitation and continue to kick the can down the road as long as you can. This is very much reminiscent of some of the opinions that I've seen out of, gold buffs like Peter Schiff, for example. Obviously, the difference between Peter Schiff and Tyler Winklevoss is that Schiff is not really so much into Bitcoin these days. But many people have expressed these basic opinions is that, look, we cannot keep inflating the credit bubble. We cannot keep borrowing against our future and our children's future. Eventually, there has to be a reckoning. We cannot just keep printing money money out of thin air that is no longer represented at a fundamental level by our manufacturing, by our labor markets. And this is a problem. I agree with Tyler here that it is growing and we are becoming addicted to it. People live on a credit dependency. There's no doubt about it. Moving right along, Tyler talks about here the impact of COVID-19 and the fact that although stimulus is welcome and although relief is something that we need, it's been mismanaged because you have all these different bodies of government. So one sector of government borrowing against another sector of government, passing funny money around that ultimately doesn't equate to any real value. And then exacerbating these problems is COVID-19, talking about, for example, some of the different legislation that has been passed. For example, the House recently passed the CARES Act, regardless of what you think of it, that authorized a $2 trillion stimulus package that includes helicopter money, and lawmakers are currently negotiating another stimulus package. So regardless of whether or not you think it's necessary, let's not get into the politics of that per se, but it is very expensive. It is irrefutably very expensive and something that we cannot afford. Look, if the United States was any kind of a company, it would have been labeled insolvent long ago. It's absolutely bankrupt. So COVID-19, the point being made here is that we are exacerbating existing problems and nothing is being solved. It's really only getting worse. Okay, let's now talk a little bit about Bitcoin. So Tyler here says that we've laid out the problems with the US dollar. We've kind of skipped over the problems associated with oil and gold, but they do exist. Now, let's talk about the solution. First, let's establish a few general ideas and some perspectives on money. Money is a technology. It was first invented thousands of years ago to solve the limitations of barter, namely what economists refer to as the confidence of wants dilemma. Like any technology, money can always be improved upon and iterated on. Humans have been evolving money since its inception, and crypto really is just the latest iteration of that invention. Money has also been many things over the years, including but not limited to shells, beads, metals, paper backed by metal, paper not backed by metal, and much more. And so ultimately, money is whatever we all agree it is. To a certain extent, it's arbitrary. We just go with the best system. And Bitcoin is the world's best system right now. It's the world's first internet native money, which is to say money purpose-built for the internet. It works the same way your email works, which is not the case for all forms of money. And cryptocurrencies like Bitcoin are networks, they're not companies, and should be valued using Metcalfe's law, which you can read more about here using the link. Methods used to value companies, such as discounted cash flow models, simply won't work. And even drawing stock market bubble analogies is comparing apples and oranges. And of course, the years-long tradition of comparing Bitcoin to gold here is not something we're going to skip over. What's interesting, though, is that generally speaking, Bitcoiners and those in the crypto space speak, kind of favorably toward gold, at least in comparison to fiat money. But here, I think they're not pulling their punches. And Tyler very, very systemically here goes through why Bitcoin is superior to gold. Look, we've covered these discussions before. It's nothing new, but for many reasons, gold is not the solution to the dilemmas that are being faced by the Federal Reserve and other central banks. For all these reasons, gold is inferior to the new forms of money such as Bitcoin in terms of its scarcity, in terms of its durability. Bitcoin and new cryptos also have the portability and divisibility advantages, storage advantages. They're better at reducing counterfeiting, and adoption, of course, at least as of right now, is probably the only category here in which gold has the advantage, but that's going to change with time. That's going to swing over at one point or another, in our opinion, and apparently in the Tyler Winklevoss opinion. Okay, so here's the deal. Inflation is coming sooner or later. Money stored in the bank will get run over. Money invested in assets like real estate or the stock market will keep pace. Money stored in gold or Bitcoin will outrun the scourge, and money stored in Bitcoin will run the fastest, overtaking gold. Yes, it's true that gold has a multi-millennia head start and strong foundation of trust, and as a result, it may be the right short to medium-term choice for risk-averse types. After all, Bitcoin is still young and therefore carries both significant technological risks as well as political risk in certain jurisdictions. Nonetheless, we believe, the Cameron and Tyler Winklevosses of the world, that Bitcoin will continue to cannibalize gold, and this story will play out dramatically over the next decade. The rate of technological adoption is growing exponentially, and software is eating the world, and gold is on the menu. Well said. And here's, I think, a point that really backs that up, that last statement up. From no telephones to smartphones, and as you can see here, the last 100 and not even 20 years. This is a stretch from the year 1900 to 2011. So this trend has only continued here, where the means of communication were very, very limited, obviously 120 years ago. And then for the longest time, for just about 100 years, years, the world was dominated by one form of communication technology, landline telephones. Mobile phones started to take hold and really started to skyrocket in about, to the year 2000 or so, maybe just after 2000. So the turn of the new millennia, I suppose. And then smartphones, again, this is 2011. Smartphones are now ubiquitous. Smartphones, as we've covered in many different segments, are now more common for people than having bank accounts. That is to say, people are more likely in many parts of the world to have a cell phone than they are to have a bank account. So in conclusion here, Bitcoin has already made significant ground on gold, going from white paper to over 200 billion in market capitalization in under a decade. And today the market capitalization of above ground gold is conservatively about $9 trillion. So if we're right about using a gold framework to value Bitcoin, and Bitcoin continues on this path, then the bull case scenario for Bitcoin is that it is undervalued by a multiple of 45. Again, assuming that it's going to grow from that 200 billion market cap to about 9 trillion where gold currently sits. Said differently, the price of Bitcoin could appreciate 45 times from where it is today, which means we could see a price of $500,000 per Bitcoin. It's as simple as that. Once the market cap of Bitcoin catches up to and matches or perhaps even exceeds the market cap of gold, we should see a value of individual Bitcoins somewhere in the $500,000 range. All of this does not factor in the possibility of Bitcoin displacing some portion of the $11.7 trillion of fiat foreign exchange reserves held by governments. Foreshadowing this, at least one publicly traded U.S. corporation has begun holding Bitcoin as a treasury reserve asset. That company is MicroStrategy. You may remember we covered them in the news probably a couple weeks ago or so. If central banks start to diversify their foreign fiat holdings even partially into Bitcoin, maybe 10 times, then 45 times multiple gets revised upward to 55 times, or about 600,000 USD per Bitcoin, and so forth. So there it is, guys. Once the market cap of gold matches up with the market cap of Bitcoin, that is to say Bitcoin catches up, we're looking at about $500,000 per Bitcoin. This is a very informative article, a little bit more geared toward the newbies, so we did skip over some sections. I would highly recommend checking it out, guys. It's a great one. We'll link to it, of course, in the description below. Okay, now moving on, we have new details on Vechain's project, which is called VerifyCar, and new information with regard to BMW has been unveiled. So an article published a few weeks ago highlights new details about Vechain's partnership with BMW. Vechain has developed the VerifyCar solution to track possible fraud and manipulation of secondhand cars. So the original announcement was made in April of 2019, and it revealed that VerifyCar is designed to connect important vehicle data to the vehicle in a tamper-proof manner via the Vechain Thor blockchain. And according to the former announcement, the focus is on protection against manipulation of mileage, repairs, such as the workshop book, and rights to services purchased in addition to the car, for example, navigation maps, concierge services, and others. And of course, the nice thing about this pilot project is that if it is proven to be successful, Vechain can extrapolate its best practices and really work with anybody, any auto manufacturer in the world, or other companies in other sectors entirely for that matter. So this bodes very well. In addition, it was revealed that Vechain jointly bears the cost of operation and development, and once the DApp is ready for production, it can be marketed to all car manufacturers, including BMW's competitors, reducing the solution's unique selling point, but creating beneficial network effects for the app's distribution. And furthermore, the article concludes, if VerifyCar comes out and is successful, it would be one of the first blockchain-based mass applications from German industry. The potential advantages of this DApp appear to be promising. And guys, we have Ankr here, which is partnering with KardiaChain to offer a unique application to the DeFi space. Ankr is tweeting about it. We welcome our new partners of KardiaChain, hashtag Enter for Enterprise, hashtag DeFi. KardiaChain tweeting on the 27th of August, KardiaChain partners with Ankr to offer a unique application of the DeFi space. KardiaChain will deliver an industry-first DeFi application that enables cross-chain asset exchange regardless of protocol. You can check out more here with the link that's included in the original KardiaChain tweet. You can also read more about it here on medium.com. KardiaChain partners with Ankr to offer a unique application in the decentralized finance space. Also in the news here is Quarkchain and their multi-native token, how it's going to change the entire decentralized finance concept. Quarkchain at Quark_chain on Twitter, tweeting, efficient but simple. Read the article to learn how Quarkchain multi-native token makes a revolution to the DeFi network and decreases gas costs. The new DeFi world will start with the creation of personalized multi-native tokens. Guys, we're a bit short on time, but you can check that out here. It's on medium.com. We'll link to this in the description below. Efficient but simple, how Quarkchain's multi-native tokens change the DeFi concept. One of the biggest issues here that they're contending with is the fact that we are seeing a lot of network congestion lately, skyrocketing gas fees. In fact, things are getting very expensive once again to send, to receive. So take a look at their solution, what Quarkchain is doing that's a little bit different, and how hopefully it could revolutionize the DeFi space if they are true on their promises. Guys, that about wraps it up for today, everybody. Do be sure you're following us on all the regular social media channels and keep checking back into altcoinbuzz.io for all the latest. Go ahead, like, subscribe, share, and hit the bell to receive notifications if you've enjoyed today's video. Best of luck, of course, if you choose to invest on this Friday. Have a great tail end to your week, everybody, though. Have a great start to your weekend. Stay safe out there, everyone. And as always, we do hope to see you again soon in our next video. Take care.